All right. All right, everyone. My name is Matthew Timpane, and I am from Schaefer's Investment Research. I am a senior market strategist over there, and we have been in the options research industry for over 40 years now. I believe it's 41 or 42 now. So one of the longest in the game, and we've been doing this for a long, long time. I was just looking at some charts here ahead of this event. So let's get to a chart that is kind of something we'll highlight here. But on top of that, I am also a chartered market technician. Our specialty really is kind of more in the swing trading type of concept, so not really day trading. We will do some overnight trades, but for the most part, most of our trades for are at least 5 days to, anywhere from 90 days is kind of our sweet spot. We will have some longer term trades that might last out to about 6 months. But for the most part, most of them last somewhere between 5 and 90 days. A lot of 30-day types of services as well. So to start it off, I just wanted to kind of share a chart that a trade that we've been in and we've traded here, and it's going to kind of go into some ideas here quickly of ideas that we're kind of looking at. So just bear with me. So this was a chart of Robinhood. And when we entered was on the day after the breakout. So a lot of the times we love to look for these day after breakouts. As you can see here, you had the breakout on 10/8, October 24th, but on 10/9, you kind of get this big pullback, right? This big reversal. And then once you retake that all-time high level or that breakout level, that's when you really kind of want to get into that position, right? You want to be able to get into it or wait towards the close. That way, you know that buyers are in control of the stock. And as you can see, so far this trade is working out. This is definitely a swing trade now. So basically, we're looking at it as, hey, we're probably going to get out of this thing at break even at worst, because we're not going to want to hold on to this option, uh, past that breakout point. And right now we're sitting in some decent profits, 30-40%. So we're gonna hopefully hold this thing. I believe it was the December contract in this one. So we're hopefully gonna continue to see a move higher here in Robinhood through the year end. And that's kind of the mantra of how we look at a lot of trades, at least right now in our environment. We do a lot of mean reversion trades as well. But let's just look at something that could be actionable, today. Uh, or actually, let's review one more. This is a personal trade I took actually. Hut. So it's crypto miner Hut 8 Corporation. So as you can see, we had this big breakout 10/18. I was actually flying out over that weekend. So on that Monday, I arrived on the West Coast and still, woke up early, took this trade, saw that we were kind of pushing down lower. I knew that I wanted to get into this trade here. You can also be more aggressive, which I was that actually that morning. I was taking and buying into this pullback. So then you use the pullback level as your dip. You also have a lot of other things going with you on here. So I just kind of flip this on and off sometimes, and that's the moving average levels here. It just gives me an idea of, um, the EMAs and the simple MAs. I don't usually have it on my charts too much, but uh, it gives you the idea of what you can look for. So you can set up, your own 5, 10, 20, 50 if you want here. And it shows this expansion here. So it's kind of like a launch pad type setup. You have a lot of moving averages together, very tight, and they're expanding now outwards and upwards. So it gives you a little bit more confidence to take that dip buying mentality when you're going into that level there around 1350. So Hut 8 was one that I've personally in. I did take a little off, so for full disclosure, on a personal basis this morning here, as we approach into this old island reversal level. So we have, island reversal here at 18 that broke down from. So it's a logical spot for like a first target area for me. My real goal for this though is to at least hit $21 on Hut 8. So that would be an area I'll probably take another third off of and then see if this thing can ignite higher and just break out and let the rest run on that. I did trade this with shares on a personal basis, not through options. Though you could have played, I was looking at it, you could have easily played like the 13 or the 14 strike, really the 14 strike you'd want, even on that pullback. gives you a little bit out of the money, and you would have doubled or you would have tripled that option contract by $21 on there. All right, so let's go look at a couple actionable ideas here quickly before we get into the questions or the tickers that you throw into the box that I will be looking at. So Serve Robotics, Serve Robotics here. This is one that broke out yesterday. I'm sure you probably saw it on some scanners. It's a little bit of a newer issue. So if you're an active trader, you probably saw this, whether it was on volume or breakout or just you surf Twitter. I mean, it was all over the place. So you are potentially getting an actionable pullback here today. You would want to trade that against this kind of this 1050 to 1025 level. That is where I would look. See, again, you have expanding MAs and, easily could trade up to, first level, I would probably look for targeting is about $14. Still decent trade. Yes, it's more risky asset. But for a first target, you're still pulling off easily 10% there. The real goal, I think, is you're going to see this at least pull to about 18 or even back to these all-time highs here around 2150. And then a final one here. Let's see if it's actually working out this morning. Iris Energy, very much similar to that Hut 8. It's name. So it's in the same space to some extent, even though it is an energy name. And we are looking here for this breakout to kind of hold right above 968. I believe I had it marked 965. So 965, and we finally got that breakout. You got to pull back this morning. As you can see, buyers are starting to come in a little bit here. This was the level that you would want to trade against. And down here, you're starting to see volume come in, right? These are big volume tranches breaking above, and it's buy volume. So it's up volume versus down volume. And you're starting to see buyers just step into the stock, even ahead of this breakout level. So we want to see this continue on. I mean, really, I see no reason for this as long as we remain in a bullish cycle. We do have some volatility ahead with the elections, so it could get a little dicey. Probably better with stocks here than options at this point, unless you're going to go a little bit longer term. Look out at maybe January. I don't know where January would get you on an option strike right now. I would guess even if you're buying the 15 or buying like the 11 strikes, $15 is probably only going to get you about 100% on that trade right now. I'm going to guess implied volatility is a little bit jacked up with the elections coming around the corner. So definitely can trade it with stock or options, but stock might be a way to go in case we do get a little bit of a grind here. But as long as we hold this 965 level, and then, or if you want to kind of be a little bit more, loose with that, 940. So close below 940, you'd want to be out of that trade because you're going to head back into this chop box that it was in for what was it, 3 months. So that's the level we're looking at. Now we do have a promotion that we are offering today that I want to show you guys before we get to all the questions. So let's just show that. Hopefully everybody can see this right here. I did share the window, so that should be good. All right, so we are doing a special on our Power Trend service right now. You average 4 put or call buy alerts every month. Sometimes you get 5. Some months, if there isn't a lot of swing setups, you're going to get 3, but it usually evens out over the long run. And usually, if anything, you usually exceed it. You might get a couple extra trades throughout the year. We are doing a special. Usually it's $2,000 per year. We are going to just do $1,000 or $995 actually, $995 for the lifetime. So you'll never have to pay a dime again. You will get Power Trend for $995, and you'll get those trades for the rest of your life. So if you want, this is a great service. It's very much been one of our best services, I would say, over the years I've been with Schaefer's. It's a swing trading service that, obviously, not all trading strategies work in all market environments, but this one has worked well through most environments. And we've had some huge years in this service. So it's a great service to be a part of. We do target profits of 150 to 200% on every option contract trade that we're trading in here. And then in the last 12 months, the portfolio itself is up 301%. Just give us a call. We love talking to our clients. You can just give us a call at 1-800-448-2080 today and then mention Power T8, and that will give you the code for $1,000 off and give you lifetime access to these trades. Otherwise, you can text the code to 513-675-0167, and we can do text message ordering as well. All right, so let's get into the questions here. We will pull this off quickly. All right, there we go. And I gotta pull up the chat box, so just bear with me for a second. For some reason, it disappeared when I shared my screen. All right.
Are you able to find it? You can hit Alt H too. That's
Alt H, that
yeah,
helps.
yeah.
Still not pulling up. Alt H. It's dinging on me. All right. Chat.
Move. Are you able to find the Zoom menu? It's probably at the top of the screen.
Yeah, see, I just got team chat there, David.
No.
I'm not sure why.
Do you have multiple screens?
I do have multiple screens.
Okay, it might be on one of the other windows.
I have two windows, Zoom and
Or
screen share, which is weird. That is it. Oh, here we go. There we go. All right.
okay, you see it now.
All right, everyone. Sorry about the technical difficulties. It's been a while since I've been on Zoom. Last one I think was with you guys, and I probably had it set up early. All right. So Docu. All right. So Docu. Yeah, Docu, for the longest time, this has been a great premium seller. And then recently we finally get this big breakout. Right. So let's actually just look at it on a weekly scale quickly here. So Docu could be entering, this is what we're calling a huge base here on a weekly, right? So you kind of had this hockey stick pattern. You usually don't want to get involved when you're seeing this, right? You're starting to see this hockey stick pattern. It's really tough to come back from, but if you can get these bases to kind of clear out, and I would look at it from right about here, because we're seeing, okay, why, what was kind of going on? We're starting to see very oversold levels here. It tried to hold, it finally broke below, and then you just got stuck in this sideways action for what was it, since 2022, basically, the end of 2022. So now we've been in a 2-year, wide range, obviously, consolidation between 40 and 70 here. So if we finally kind of get this breakout, you're going to be able to at least clear levels around 87 and then possibly even higher. The next level I would look for that trade would be 110. Obviously, there's always a little bit of risk around a round number, so around 100 would be another area that you would look at risk level if you're looking at this from the long side. But if you want to get long, say you're not long yet, we do have earnings coming up. Right now we're a little bit underneath this level here at 71.25. I would kind of wait for it. Sometimes it's better to wait. You're sitting there like, oh, I lost like, 2-3% on the trade if you're in stocks, or, in options that could be 20-30%. But, it's just better to wait for that trade to really kind of set up for you. These are longer term moving averages on a weekly basis, so I would probably just kind of ignore this if you're looking at my chart here. You are seeing expansion of the shorter term 5, 10, 20s, 50, 52-week moving average as well. So that's a 1-year moving average. So as long as we get above 75, I would say, I mean, you really have a lot of room on this trade. First level will be 86. Second level, you'd start to look around that 100 and then 110 on Docu. So even if you pull it out here, you can kind of see this on the daily here. So we've gotten really overbought, and now we're consolidating in a flag type pattern, pulling into this 20-day moving average. That doesn't have to necessarily be the bottom. You can come down here, test that gap up. but we are starting to see some good volume tranches. We did see a lot of selling kind of happen here on October 10th. Obviously, people that have been stuck in this position for a long time wanted to get out of that, but we are entering a nice phase. So again, above 71, 71.25. If you want to be real aggressive, that would be the level I'd take. If you want to be a little bit more conservative, look for that clearing of that like 75, 76 level there on the weekly scale. All right. PHM. I can pull up some other data on these things too, um, just so I can kind of look at it from an option perspective. All right, PHM. This is actually we covered, I believe it might have been in the FIB conference. So let's get rid of the FIBs since we are seeing the FIB extension was reached. You know, you thought there was going to be this breakout up here, and now you're pulling right back into where the FIB range, that last FIB range was. So kind of a failed move, right? This is all in the back of DHI's earnings today. So we saw that this morning. DHI kind of cleared the decks in a lot of these home builders. And to be honest, I was actually in a trade, Toll Brothers, that I just got out of yesterday, and I'll show you that quickly right after this. But DHI, we're gonna want to maybe see, hey, you know, give this a few days. You are pulling into a level down here around 120. So this 120 region, right? Like I always kind of look at it as zones. So it's like 122 to like 119. You have some of these gaps here. I would be looking at like, hey, if you want to take a long side of the trade here, you have a year-to-date anchored VWAP level, and then you have the 200-day moving average coming right up here around this 120. So give this some time. Don't just go in it today unless you're looking at buying tranches. So if you're going to buy in multiples, yes, it could reverse back up, trade this gap. 100% could happen here. But for me, like a conservative, if you're looking at it from like more of a weekly time frame or you know, swing trade, you know, I would probably wait on this, pull the trigger at a later date. Because as you can see here, you just broke down from a 65 minute, you know, kind of sideways action move here. So, you know, really, you know, here is the next levels even on this. Yeah, I mean, you can go right up to 135 even, but I mean, I would think that, you know, 132, you're probably going to get rejected. I would wait, you know, when you're seeing big moves like this, sometimes it's just best to wait 3 days. You know, that's the one thing I'll say is like, you know, I'm not always been the biggest fan of Jim Cramer, but he always says wait 3 days, and it's just you're just waiting for the exhaustion of the sellers to get out of the market. Because if there is more sellers, they will show up. They'll push this price right back down, and you'll probably get that 200-day and that year-to-date anchored VWAP, which you know that's a nice kind of reversion standpoint if you want to take a long against. Hard to short here as well. The moves already happened. You had this bear flag, and you know it's already done. You know, so let me just show you why I got out of Toll Brothers. I got out of it really quickly. So it's very similar to PHM. It broke out here on Friday, so I actually put it. It was in one of our own services, and it was a weekend service. So we enter on Monday, so we take a VWAP for all day price entry, and then it gapped down again, and then it formed this little bear flag. So on Friday, even though it came up here and tested this 20-day moving average, I didn't like it. You know, we had a big reversal on Friday all the way back down to 149. We were out in January calls too, 155 strike. So, you know, this is my trade. I mean, you know, so it's I figured, hey, let's just get out of this. We got a bear flag. We got DHI earnings coming up. You don't know what's going to happen. Yes, you're right at the 50-day, but this doesn't look pretty. It violated 155, an area I wanted to see hold. There was a big call level there. I wanted that to hold on to it. It didn't hold it. So it's better at this time, just get rid of the position. You got to learn very quickly to just cut your losses. Otherwise, those losses can get instrumentally worse. And as you can see, this morning would have been horrible for that position. It would have been down 60, 70% probably, even out, you know, into January calls there. So on to the next one, Disney. All right, Disney, yes. You know, it's almost this has been punished, right? Conservatives, from a political aspect, have been bashing Disney from the woke perspective, and I'm not big on politics. Politics doesn't make you money. Uh, you know, it's just not something I've ever played that game. But when I see things like that, you almost want to take the other side, right? Long term, start thinking about looking at this like, hey, this is a huge base still that has not been violated, right? Like, so you haven't been able to get through this 80 level, and you haven't been able to get through this 90 kind of ish level. So this 90 to 80 kind of resistant or support zone. This is a big base inside of a big bull market. So I would almost rather take the reversion trade unless you're going to be trading it short term. If you trade short term and you want to take the put side of this trade, I would look for, really, you want to see a breakdown of this trend here. So first, look for the break here. And then remember, you also have this simple 50-day moving average. A lot of people play off of that. So you might get a little bit of kind of chop here as you get these other short-term moving averages rolling over. So right now it'd be a no trade for me, but the other way, a long, yeah, I'd probably up this long actually to here. It's kind of like a ban zone, right? Like, so I'm not going to draw a box. That's too long for this. I want to get to all the questions. We don't have many left, and we don't have much time left. So above 97.5 is somewhere I would kind of try to look to get long again. You do have a little bit of risk here at 98.50, but if you can get into this gap, you do have some levels 100, and stuff like that to battle with. But you get into that gap, you never know. You can get back to 110 here on Disney. I almost like this better as a contrarian standpoint. Again, breaks down. You do have a short opportunity as well from a shorter term aspect, but longer term, it's a big base in a bull market. I probably look from it from the long side in the long run. Pave, beautiful breakout here in Pave. Seriously, thank you actually for putting this on my radar. Something I will take a look at and a little bit deeper here. $40 is your line in the sand here on Pave. If you are in this, look for maybe entry. You do have this MACD crossing down. This is more of just, hey, what kind of phase are we in? I don't necessarily use it. I will enter in a negative MACD area here. I'm looking for it obviously to cross back over, but it is a lagging indicator, plain and simple. So it's not the end all be all. I just kind of lets me know what the trend phase is in, but this is still very much bullish. So you kind of get this pullback here. If for some reason you get pulled back to $40, that's a great opportunity to take it. If you're in it, that's your stop level right now. And anything on that break below that 40 level and a close below it is where I get out, because you're kind of heading back into this chop range. But if you're not in it, you can start looking to add into this position. Probably, you could almost make your first entry right here if you wanted, around $41, even today if you wanted to get in there. But I would leg into it because there's a chance to go down to about $40. AVGO is the next one. Pave, again, thank you for the infrastructure ETF play. That's definitely something, for like IRA accounts, perfect play, right? Like, you want to have some safer plays in there with ETFs, and that it looks good for a longer term perspective. I would look at legging into that. All right, AVGO. All right, so love Broadcom. Longer term, played this multiple times. We did just get a rejection here at prior highs back in July or June highs. So you had like the niner back then from the DeMark, and now you are pulling back into this level, right? But you do have a big base here, so I won't draw it, but smiley face base, and you're pulling back down. So logical levels. You're pulling right into one right now. 170 is a logical level that you might see some buyers start stepping into this. It is a little bit, sideways consolidation, bear flagging. You do have a flattening 20-day simple that's rolling over. You do have the EMAs already rolled over, but you are right at this 50-day moving average. So if you want to kind of take a shot at this, you're probably right there to take a shot. Keep a tight leash on it, breaks this 50-day, maybe just let it go for a little bit, see where it resets up. Easily then could get a push back down to about 158 on a move, or even back down to this year-to-date anchored VWAP. and this 200-day moving average. If for some reason we get some big volatility, again, MACD's crossing over on this on the weekly basis. So trends deteriorating a little bit. Again, not end all, type of situation for me. I don't take that with a high validity or a high valid point here, but it just kind of tells you. You have seen huge buyers step into this though on volume, and it doesn't seem like they've really exited either. The last time you had a lot of exiting was post earnings move. So we are still seeing buyers kind of step in. These are these big green bars here. I like AVGO for the long term. One reason why I think probably you've seen a lot of this kind of sideways move is because of the split. That typically happens. So I always watch out for splits. When splits happen, they're great to play into the split, but after we end up seeing a lot of sideways action or even sometimes a down move, as you start seeing more institutions kind of liquidate into retail, as I like to call it. Not to say that there's anything different from a fundamental aspect of the company, but it's just the way it works. They can buy huge share companies like when Amazon was 2000. It's tough for smaller retail traders. Very global. Actually, this has come up on some screens lately. And clean slate here. So yeah, I mean, you move back above, you kind of had this fake out oops, pulled back, and you almost got a second kind of oops, right? Like, it's them trying, market traders trying to fake you out. Whether it's market makers or just traders in the market in general, you're getting these fake out moves, right? Now you're back above. This is actually a very good spot to kind of say, hey, let's take a shot here. I actually really like this. It's a great one to put into the chat. $69. Line in the sand right there. If you want to kind of give this a real loose kind of stop, give it 67.50, kind of trail it with that 50-day. But otherwise, you have the line in the sand here, 69.25. It's a beautiful move. If you want to be conservative on when you take the entry, wait for $70 to clear here. I'm going to guess if I look at an OI config, there's probably a 75 or a 70 strike call level right there. So let's just type this in. I have 2 minutes. Yeah, so you got a decent amount of calls there. 65 strike is the peak call level. So you are in positive gamma territory here, but 70 strike call level, some of this could be spreads as well. Those could be sold. So you got about 3,900 contracts through January expiration at that 70 call level. So that would be your conservative bet, right? A close over 70, they can start squeezing this thing out. So it looks like I have probably only a few seconds left here. So I'd like to thank everyone for joining me today. Definitely come on over to Schaefer's Research and give us a chat. And it's been great joining you. I love being with you guys every time, and look forward to it next time.